Yo, what's up traders? Welcome to a new video. So in this video, I'll be going over the ultimate trading glossary. So in this video, I will explain all the relevant trading terms from A to Z. And you can find a complete list in the description below. It's an article, so I just can't cover all the terms because there are many terms. So I grabbed a few for every single letter, and if you are interested in the entire list, just check out the list down below in the description. All right, so the ask price, we start with A, is the lowest price a seller is willing to accept for an asset. Is what you pay when you buy. So you always have a ask and bid price, but yeah, bid will come later. Arbitrage, buying a currency pair in one market and selling it in another to profit from the price difference. So what you saw in the crypto space, you have several brokers with different prices, and if you are really creative, you can buy from one broker or exchange and sell in the other and make a nice profit. Broker is a person or a company that buys and sells assets for others, and if you want to place orders, using a broker is mandatory. And using a safe broker is extremely important. And if you're interested in a broker that offers great trading conditions, just check out one of the links down below in the description and you can find my recommended broker. Buy stop. It's an order to buy a currency or index once its price surpasses a specific point, ensuring a higher probability of reaching a momentum. So when price is, for example, set at 10, you can place a buy stop at 12. So once price reaches the 12 level, and a buy order will get placed. CFD stands for contract for difference, a trading tool that allows you to speculate on the rising or falling prices of fast-moving global financial markets or instruments. Challenge, and then challenge in the sense of a prop firm, a test set by proprietary trading firms that traders must pass to gain access to the firm's capital for trading. I have tested a few prop firms, and again, you can check out the description for my recommended prop firm. This one they offer a 500k capital, and you can keep 80% of the profits, which is really nice, of course. Discretionary trading. So trading is based on human decision making rather than automated systems. This is more for people with a little bit more of experience. If you are really a beginner, I recommend just using mechanical trading. Drawdown. The reduction of one's trading capital after a series of losing trades. I don't think I have to explain it. Let's say that your balance is 100 and your equity is 80, then it means that your drawdown is 20%, right? So you're just not in a loss until you close it. All right, edge, an advantage that a trader has that can help predict market movements more accurately. So the point of trading, profitable trading, is that you have an edge in the market. So the bigger the edge, the bigger the profit. But with a small edge, you can eventually make money as well, which is good. But your job as a trader is to have an advantage, have an edge in the market. Equity, the total value of a trader's account when any open positions are factored in. If all your trades were closed at the current market rates, equity is the amount you would have. It includes your account balance plus or minus the profits or losses of any open positions. As I mentioned earlier, if you have a balance of 100, your drawdown is 20, then your equity is 80. And if you close the open order, then your new balance would become 80. Forex, foreign exchange market, a global marketplace for exchanging national currencies against one another. Futures contract, an agreement to buy or sell an asset at a future date at an agreed upon price. The gap, a term used in trading to describe a situation where a security's price changes sharply up or down with no trading in between. So basically you see a gap in the weekends or after the weekend because let's say on Friday the price is 100 and on Monday or Sunday when market opens we see a big gap and market the price is not 100 but it's, let's say, 120. Then we see a gap, and not always but most of the time we see that the market reacts to the gap and tries to fill it. GBP/USD, trading symbol for the Great Britain pound versus the United States dollar. Hedge, make an investment to reduce the risk of adverse price movements in an asset. High, and then I mean the swing high, the peak price reached by a market before a downturn. So let me go back. When you can have a swing high or a swing low. So it basically is the highest point of a price range. Now, not really a range, but let's say you have an uptrend, and then you can have the highest point of the uptrend until it goes to the downside, and that is called a swing high. Index, a statistical measure of change in an economy or securities market. Journal, a record where traders keep track of their trading activities and strategies, and I really recommend traders to have a journal because that will rapidly increase your trading performance in a good way. KYC, know your customer. This is if you want to sign up for a broker, they have a policy which is that they need to know who their customer is. So the process of a business identifying and verifying the identity of its clients. L, limit order, an order to buy or sell a security at a specific price or better. Let's say price is 100 and you think like, I do not want to buy right now at 100, but I believe that price goes down first to 80, and once it has reached the 80 level, I want to buy. But yeah, you don't want to keep looking at the charts 24/7, 24/5 I mean. So you place a limit order, and then you place a limit order at 80, meaning when price goes down, then you buy at the 80 level, and if price goes up after that, you are in profit. Liquid market, a market where there are enough transactions and participants to easily buy or sell securities, and you want to trade liquid markets because those provide better trading possibilities and conditions. Margin, the amount of capital required in an account to keep trades open. Market order, an order to buy or sell a security immediately at the best available current price. So I think many traders, they would use the market order, which means that you buy or you sell let's say a symbol, forex pair or indice, an instrument at that level it has reached right now, right? So let's say price is set at 100, then you basically click on buy or sell, and from that moment you are in a buy or sell trade. Nasdaq, a global electronic marketplace for buying and selling securities, as well as the benchmark index for US technology stocks. And there are 100 companies in the Nasdaq currently. Options, contracts that give the buyer the right but not the obligation to buy or sell an underlying asset at a set price on or before a certain date. Outside bar, a candlestick pattern where the high and low are both higher and lower than the previous day, indicating potential market reversal. Portfolio, a collection of financial investments like stocks, bonds, commodities, cash, and cash equivalents, including mutual funds and ETFs. You can also think of a portfolio of, let's say, that you are an automated trader and you have a portfolio of, let's say, 10 symbols, forex pairs, and in that way you spread your risk. You have multiple trading strategies that trade different symbols or pairs. Prop firm, a proprietary trading firm that provides its traders with capital to trade. And again, I recommend the prop firm in the description because the trading conditions are nice and it's a trusted company. Quote, currency. The second currency in a forex pair used to define the unit price of the base currency, like Euro USD. And then the euro is the base currency and the quote currency is the USD, right? Resistance level, a price level where the selling is expected to take place. So you have support and you have resistance, and resistance is the upper levels, and support are the down levels. But let's say price goes to is at 100 and it goes to the upside to 120 and it keeps retesting the 120 level for, let's say, 3 or 4 times, then we can say that the 120 level is the resistance level. It doesn't go higher than that, right? It's a ceiling. Risk management, the process of identifying, analyzing, and accepting or mitigating uncertainty in investments decisions. Risk management is really important. So let's say that you are in a trade, but you see that price has a hard time to go even higher. You can place you can adjust your stop loss to, let's say, break even or a little bit in profit. And once price drops really hard, then you secured some profits, right? So that's a form of risk management. Another form of risk management is that as soon as you place an order, you know exactly where to place your stop loss and where to place your take profit. And let's say that for every dollar you so let's say that you're willing to lose $1 and you desire to win $2. So that's a 1 to 2 risk reward rates your trade, which is also a form of risk management. Sell stop, an order to sell a currency or index once its price falls to a specific level. Setup, a specific market condition or pattern that leads to a trading opportunity. Slippage, the difference between the expected price of a trade and the price at which the trade is executed. I want to stand still to the sell stop. I already explained the buy stop, but the sell stop is basically the same, but then in reverse for a sell order. Let's say price is at the moment 100 and you believe that price would drop to 50, then you're not really 100% sure, right? It also could go to the upside, but if it goes down and it crosses the 80 level, then you believe it would go to the 50 or 40 level, whatever your target is. Then you can place a sell stop order at 80, meaning price is 100, but once it drops to 80, you want to enter the trade and take a sell order, but not at that moment, at a specific moment, but in the future. So you can go to sleep, for example, and in the evening or at night, once price crosses the 80 level, it places a sell stop automatically from 80 and with a TP target at 40 or 50, whatever your TP target is. Technical analysis, a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity. Basically, you have fundamental analysis, you have sentimental and you have technical analysis is what the majority of the people, the retail traders, use. And it means that you look at trend lines, you look at specific candles, specific patterns, the head and shoulder patterns. So yeah, it's basically you take trades based on specific factors or indicators in the market, right? So as I mentioned, you have specific candlesticks, you have specific trading patterns. So yeah, you have to think about that. Trading bot, an automated software that handles financial exchanges automatically and makes trading decisions on behalf of human traders. If you want to take a look at my trading robots, just check it out in the description. Currently, I don't know when you watch it, but at the moment I have one of my trading robots being tracked, and I can see the results on my Fixbook. And every single week I create a video on the trading robot and its performance, and I discuss basically the performance of the trading robot that week. But I'm planning to do more videos on trading robots and also more on developing my trading robots. Uptrend, a market trend characterized by rising prices. So basically you have an uptrend and you have a downtrend. Uptrend is when let's say prices set at 100 and we see price climbs slowly to 110, 120, 130, 150. So price is moving to the upside. Volatility, the rate at which the price of a security increases or decreases for a given set of returns. And most scalpers, for example, they really like volatility, a high volatility market, because price moves really quickly in a short amount of time. So in that moment, they can make quite some gains. Weekend hold, a position in trading that is held over the weekend, exposing it to potential market gaps from economic or political news that may arise when the market is closed. And you also have to keep in mind that depending on the specific symbol, that you need to pay swap or you earn swap. Xenocurrency, a currency that is traded outside of its domestic borders. Yield, the income return of an investment, such as the interest or dividends received from holding a particular security. The higher the yield, the better, of course. Z, zero coupon bond, a bond that does not pay interest during its life and is sold at a discount from its redemption price. So that's it. From A to Z, we went over all the terms, the relevant terms. If you're a beginner trader, this is really useful for you. And if you want to see the complete list, just check out the link in the description to get the complete list with all the terms from A to Z. Let me show you the article. So if you click on the link on the article down below in the description, you can just read it and see the article and just again read it on your own pace. If you're a beginner, I really recommend to just check it out at least once and see if you know all the relevant terms that are related to trading, forex trading, indices trading, and even stocks a little bit. So if you like this video, give it a thumbs up, subscribe, and I'll see you in the next video.